Greetings everybody. In this video I'm going to revisit my silver valuation analysis. In a previous video I did make one and I was pleased with the results of what I was able to hammer down about how silver's price tended to fluctuate in terms of gold, and tried to smooth that out and then forecast what silver's price would be. But in that, I did not quite understand a couple of things, and one of them was why the gold to silver ratio, meaning why did silver's price fluctuate so much in terms of gold? To me, if both are monetary metals, they should be trading pretty well together in a trend, and they do that when in terms of looking at the bull market and the bear market. So when gold goes up, silver goes up as well. When gold goes down, silver goes down as well. But silver tends to plummet when gold enters a bear market, and silver tends to skyrocket when gold goes into a bull market. So it overshoots and overperforms gold during bull markets, and then it heavily underperforms gold during bear markets. I never could figure out why that is. To me, the bear market and the return should be more or less the same, and overall they are pretty much the same over the long term. But to me, even in the short term, in say a decade or so, their returns should be running right alongside each other. It's kind of like comparing the S&P 500 to the Dow Jones Industrials. They may be a different swath, but more or less they trend together because the people who are investing in one tend to invest in the other. So with that being said, it came across me that silver does have a fundamental difference to gold, and I pointed this out in that previous video, but I didn't understand how it would relate to the valuation of silver compared to gold. And that is that silver has an industrial value to it, okay? Silver's value is basically the use of a commodity as well as a monetary unit. So silver can be used in jewelry, okay, so that gives it a monetary status. It's monetary status as a precious metal, and it has also been used in history as a monetary currency. It's been tied to gold for that matter. It is rare. It has that intrinsic value quality. But especially with the onset of 20th century technology, silver has becoming more and more integrated into modern technologies today. We use it in a lot of stuff. We use it in our cell phones. We use it in our computers. It is increasingly being used in cars today as cars have become more electronic. And so many people have made that as a bullish case for silver that says silver has nowhere to go but up. And I agree with that analysis, but then they say, well, that will translate into a higher monetary value for silver, and so silver spot price will go up, and so now you need to buy all the silver medals and coins and bars you can get because it's going to outperform gold in the next century and skyrocket to hundreds and hundreds of dollars an ounce because of this, because you've got two forces working for it. You've got its industrial qualities and you've got its monetary qualities. That being said, that to me, that reasoning seemed logical, but the facts seem to go opposite, because what has been happening in the trend, and that I covered in the previous video, I'll post that link in the description, is that the gold to silver ratio has been growing over time. In other words, silver's price has been diminishing in terms of gold's price over time on a regular status. It should be the reverse, yet it's not. So then comes in all the theories that the banks are shorting silver, and that's probably true. So they're artificially depressing the price. But when you take a look at the silver shorts, in my opinion, it does not justify such a low silver price. After thinking and contemplating this on some time, I think I've been able to establish a proper method to understand what goes on with silver's price today and why it trades the way it does. And to me, the answer is to separate out its monetary value from its industrial value. It's not that the two values work together, it is actually the opposite. The two values work against each other. Why? Because the industrial value of silver only works when the economy is functioning. So in other words, when the economy grows and is functioning normally, People and investors tend to hold precious metals. Precious metals are a hard asset. They do not yield returns on income. Instead, people will intend and investors will tend to put their money in stocks and bonds that yield liquid income because the dollar or whatever currency they're using to buy their stocks and bonds in other overseas is relatively stable. Okay, it is conducive for investing and getting real returns because we buy and sell stuff in terms of that currency. Maybe that's not how it should be, but that's how it is. But in times of duress, in times of economic stress, when the economy breaks down, that's when the people flock to the monetary units like gold and silver. And that's when silver's industrial value becomes irrelevant to its price, and silver's price starts to reflect more of its monetary value. So in other words, silver tends to fluctuate between its monetary value and its industrial value. Its industrial value is tied to when the economy is functioning. Its monetary value price is tied to when the economy is breaking down. So that would explain why silver goes into such wild, violent swings. It goes into those violent swings of price when the economy is either recovering from a crisis or going into a crisis. So when it's recovering from a crisis, silver's price will plummet and approach more of its industrial value. When it starts to head into a crisis, silver's price will approach its monetary value and the price of silver will go back up. Now, how did I calculate this? Well, I realized that since silver is an industrial metal, it's best to compare it to another industrial metal, and the closest one I could find that to compensate would be the copper price. So copper in many ways functions mostly as an industrial metal, whereas silver's kind of torn in between an industrial monetary metal. And then to compensate and to approximate silver's monetary value, I decided to use gold. So to me, silver is kind of a metal that is in between copper and gold. Copper is primarily industrial. Gold is primarily monetary. Silver has qualities of both. So when we take a look at copper's price over time and how copper's price has fluctuated, that we can use that as a calculator for silver's industrial price. And when we take a look at gold's price and how it fluctuates over time, that gives you silver's monetary price. So we get a chart that looks like this in the end that explains silver's price very well. You can see that silver's price here in blue always trades in the channel of its industrial value, which I used for copper, and its monetary value, which I used for gold. And if you look during the 1970s, when the economy was unstable and we were undergoing rampant high inflation, look how silver's price traded very well with its monetary value measured in terms of gold. Now in 1980, we could see how its price actually overshot its monetary value as the Hunt brothers tried to corner the market and jack up the silver price to exponential proportions by creating artificial silver shortages. Then during the mid to late 80s and especially the 1990s, look how silver's price tended to trade more with its industrial value. That told you how strong the economy was, or at least appeared to be, compared to the 1970s and early 1980s. No longer was silver trading at its monetary value because it was no longer looked at as a monetary unit. Silver was now looked at as purely a commodity, so it traded along with its other commodity prices. So in other words, silver's commodity value does not necessarily push up its monetary value. What pushes up silver's monetary value is gold. The demand for gold drives the demand for silver when investors try to pile into monetary units. But if that's not the case, like it has been for the last 10 years, then silver will tend to approach its industrial value. It tends to function more as a commodity rather than as a monetary unit. But does this mean that silver has lost its monetary unit power or value? No, quite the opposite. It's there and it's hidden, it's dormant, because look what happened in the 2000s. So when the 2000s broke out and gold started to break out in its bull market, look what happened with silver. Still trades with its industrial value, but it tends to fluctuate a little bit more in terms of between gold and copper. And then starting post 2008, silver reasserts its dominance as a monetary unit, and it skyrockets in price. I believe we are going to see such an event happen again. If you notice now, silver is now trading roughly in between its gold price monetary value and its copper price industrial value, and it's been doing so ever since. But now if you look at it, silver is just beginning to reassert its monetary purchasing power. And I think that trend is going to continue as inflation continues. So I've sort of calculate this as like a monetary force and an industrial force to show you which is holding dominant over silver right now. So you can see that over the last several years, since silver tried to spike up in price back in 2011 during the last gold bull market, the industrial value of silver as a commodity has held sway over silver's price. It's dominating silver's price right now. But if you notice that since the pandemic has started, that force has started to wane, and silver is starting to shift back to a monetary unit. So now we get to the interesting part. What's going to happen to silver next? Well, what I've done is created a projection of what silver's value is going to be over the coming years, I think. And I've done this based off of the gold price and where I think the producer prices for commodities are going to go, okay? So here I've done my projection of silver, and basically I've done its monetary value. I've calculated its monetary value based off of what I've done with gold's projection. So I'll put that link in the video about how I've done a gold forecasting model. And so I basically just tracked it with gold and said, okay, well, here's where I think it's going to go with gold from here on out. And I kind of projected this out all the way up to the end of 2025. I think something similar like that is going to happen to silver. So silver will start off in late 2021, still keeping more to its industrial value, but it will approach its monetary value in the coming years as panic and crises set in, as inflation starts picking up and staying above that 2% norm, as we start having issues with rising interest rates, and as we go into a stock bear market and a bond bear market, and so then comes the flight to precious metals. First will come the flight to gold, with silver appreciating normally. Then silver will start to outperform gold in the next 2 to 3 years, as it has historically done. And if that's holding true, assuming that gold's price approaches about $3,500 an ounce by the end of 2025, then we're looking at silver to head to more of $100 an ounce in those coming years. And so in the previous video, I showed that silver would probably perform up to about $80 an ounce just based off the historical gold to silver ratio trends. But now that I think I understand more of why the gold to silver ratio behaves the way it does, I can now confidently say that, assuming that we're going into a gold bull market and assuming all my projections are correct about the stock bear market, we're going to see a high silver price now like never before, up to about $100 an ounce. But now, saying all this, you might say, okay, well, that's great. That means I need to stack silver over gold right away and start piling into silver. It's going to be the new thing. You have to remember now, when the economy recovers, and eventually it will sooner or later. Now, how long, it determines by monetary and fiscal policy. I mean, that's where you're placing your bets are, I mean, we could be facing the final collapse of the U.S. economy, or we could go through a recovery eventually. Who knows? But let's assume that the economy recovers. Well, what's going to happen to silver? Well, silver will leave its monetary value, and it will start to approach its industrial value, meaning that the price of silver will drop sharply. So look at where I've got its industrial value based off the appreciation of copper price, which I think is going to go on in the next 4 years. And of course, all these numbers are spurious, but at least gives you kind of an approximation to look for during a projection. Well, yeah, sure, silver could go up to $100 an ounce, and then it could easily drop back down to about $25 an ounce. I'm not saying it would plummet to that automatically, but it could deteriorate that way over time. Well, then what do you do about silver? Maybe it's better to hold gold because gold might lose some of its price, but it's certainly not going to drop back down to a fourth of its price. Well, in my opinion, I think what one should do if you are a monetary bug, if you are a gold and silver bug and you distrust stocks, you distrust government policy, and you are hell-bent on never investing in stocks and bonds, even during a bull market, then what you should do is that during a precious metals bull market, my opinion, is to buy silver predominantly, hold it, ride it up, and then once that silver to gold ratio starts approaching its normal trading range, which I would say is about 35. So when gold is about 35 times the price of silver, then what one should do is trade out your silver for gold, because gold tends to retain its value. Silver gains value during a bull market but loses value in a bear market. So then the best way to have the best of both worlds is to buy silver during a bull market rush, trade it for gold, hold the gold during the bear market, and wait, then rinse, wash, and repeat again when the next bull market starts. Now, for me personally, people have asked, have I ever bought stocks and bonds? Am I just completely bearish on stocks? No, that's not true. I've held stocks and bonds at one time. And if I get to a point where I do think that the economy will turn around and we are going to go through a stable, significant recovery, I will most likely leave my precious metals position and go buy stocks and bonds. I may hold some in gold. I may say hold 25% of my portfolio in gold just to have it, just to have it. But yeah, I would buy stocks and bonds during that next bull market. But I think the strategy here is plain and simple. You buy silver during the bull market, you abandon silver during the bear market. If anything, buy gold. But really what you should hold is a mixture of gold, stocks, and bonds during an economic recovery. Guys, thank you for watching this video. This is just my 2 cents on the matter, no pun intended. If you like the video, if you like my content, just make sure you hit like and subscribe. Comment on the channel, comment on the video. Let me know what you think about all of this. I know that I was going to talk about some technical analysis in my next video from the previous one, and I apologize about that. That's still going to come out, but I noticed with silver's drop yesterday, I wanted to make this video about some of the insights that I had about the precious metal. Until next time, I'll talk to you.